Hi, I am Dhruv and he is Sanjay, and welcome to eLearn Markets. Today we shall be discussing about the functioning of the sugar industry in India. For this video, we have divided our presentation into four major parts: the production of sugar, the forces of demand and supply, the regulatory challenges, and finally our observations. So let us first understand the sugar production process. Sugar production begins at the farmland with the plantation of the sugarcane crop. In India, there are two major varieties of crop planted, the spring crop and the Atsali crop. Both these crops take anywhere between 12 to 18 months to mature before they can be cultivated and taken to the sugar mill for crushing. At the mill, the cane is first crushed to obtain sugarcane juice. The crushing of sugarcane also yields in bagasse as a byproduct, which is used as a source of captive power generation. The sugarcane juice is then passed through three distinct phases: clarification, evaporation, and crystallization, yielding sugar as the final product. In the entire process, mills recover molasses as a byproduct, which is either captively converted into ethanol or is sold into the open market. An important point to understand in this context is a term called the recovery rate. In simple words, recovery rate is the amount of sugar that mills recover by crushing 1 unit of cane. For example, if the recovery rate of a mill is 10%, then it implies that by crushing 100 kg of cane, the mill obtains 10 kg of sugar as the final product. We will now hand it over to Sanjay, who will explain to us the forces of demand and supply.
Thank you, Dhruv. Now look into the demand supply scenario. The total installed capacity in India is around 35 million tons, with Maharashtra being the largest sugar producing state, followed by Uttar Pradesh. Most of the sugar mills in Maharashtra are owned by state government cooperative societies, whereas most of the mills in Uttar Pradesh are privately held and operated. The sugarcane sowing season begins in March or June, depending on the variety of the crop, and sugar crushing season begins in late October or early November. The annual consumption of sugar is 25 million tons, and this has been growing at a rate of 2% every year. The per capita consumption in India is 20 kg compared to 34 kg in United States and 35 kg in Europe. Now look into this graph. This graph exhibits the domestic production and consumption trends over the years. Green bar depicts the domestic production trends, which have been very volatile, whereas the red line portrays the consumption pattern, which is steady and growing at a 2% annually. Yellow bar shows the opening inventory of the seasons to start with. What you can see here in this graph, that last year sugar production dropped drastically to 20 million tons from 25 million tons, resulted into lowest inventory level of the decade due to significant production outage in Maharashtra as the state faced severe drought last year. Now Dhruv will explain the rules and regulation about the sugar industry.
Let us now understand the regulations that govern the sector. For starters, it is very important to understand that the sugar sector is at the forefront of excessive red tapeism and bureaucracy as farmers capture a substantial part of the entire value chain. The price of sugarcane is regulated at both the central and state level individually. The central level sets the fair remunerative price, or the FRP, which is the minimum payment that a mill has to pay the farmer. Then, each state individually sets the state advised price, or the SAP, which is substantially higher than the FRP. The SAP is a direct function of the recovery rate in each state. For instance, the SAP set by the Uttar Pradesh government is the highest in the country, as the state has the maximum recovery of sugar at around 10.5%. From these two graphs, what we see is that sugarcane prices have been constantly set at higher levels, year after year, but sugar prices haven't followed suit. This is because the government has controlled the prices of sugar via a combination of internal as well as external trade policies so as to ensure adequate supply of the commodity. This has eventually led to suppressed profitability for sugar manufacturers as they have under-recovered on the manufacturing of sugar.
In October 2012, Rangarajan Committee published a report highlighting the challenges in the pricing of sugarcane. The committee recommended deregulating the sugar sector with respect to pricing and selling of sugar under the levy quota. Earlier, all mills are bound to sell 10% of their production at a much lower subsidized rate under public distribution system. The committee recommends linking the sugarcane price with the final output. As per the recommendation of the committee, 70% of the proceeds for an integrated mill and 75% in case of standalone sugar mills would go to farmer. Maharashtra and Karnataka recently implemented this policy. Central government of this year has asked UP government to implement this policy as the price difference between SAP and FRP has been narrowed sharply in the last 2 years.
A sugar mill can either be a standalone or an integrated mill. In a standalone mill, the mill does not have the capacity nor the capability to process bagasse or molasses and convert it into power or ethanol. On the other hand, in an integrated mill, the mill has the capacity to convert bagasse into power and molasses into ethanol, thereby rendering it a much more profitable venture than a standalone mill. The cyclicality of the sugar industry is a combination of the regulatory environment imposed and the wild fluctuations in supply patterns. An investor who wants to understand this sector must study both these factors with particular emphasis on the former.
Sugarcane is a water-intensive crop and hence the monsoon plays an important role in deciding the fate of the industry, as shortage in the crop results in low sugarcane acreage and vice versa.
Thank you for watching our video and do subscribe to our channel eLearn Markets and do leave your comments in the section below.